So in this video, we'll go over the accounting equation and we are going to do an exercise. So this is question 1. Using the key principles of accounting equation, show the effects of the following transactions. So number 1, the owner took goods from the business for own use, 6,000. All right. So we start with question 1. So the owner took goods. So when the owner is taking goods, you're taking out of the inventory, and inventory is an asset, right? So our assets will decrease with 6,000. And now since we took this for our own use, this is coming out of our capital, okay? So it's going to negatively affect our owner's equity through your capital with a minus 6,000. All right. And then we move on to question 2. Donated goods worth 4,000 to the local volleyball team. Same thing, we are donating goods, taking out inventory, okay, goods. We are taking out inventory. This is worth 4,000, so our assets will decrease with 4,000. And then we are donating it to charity. So sometimes when you donate to charity, you can use that as an expense, right? So expense will be affected with a minus 4,000, and that's affecting your owner's equity as well. Question 3, bought a vehicle. So bought a vehicle. Remember, what is a vehicle? It's an asset. On credit, another key on credit, liability. So bought a vehicle on credit from Novel, Namibia, costing 25,000. So we bought a vehicle for 25,000. That means our asset is increasing with 25,000. We have an extra car in our garage. And now it said on credit, so that's a liability. We are owing people more, so our liability increases. We owe people more, 25,000. All right. So let's move on to question 4. Received an invoice from a local authority showing electricity due with 2,000. So this is not going to affect any assets. So question 4, we are owing 4,000. We received an invoice. Okay, so we are owing. Remember, we received an invoice. We have to pay electricity payable. It increases with 2,000. And then expenses, we incurred electricity expense for 2,000. So we have to say minus 2,000. All right, so we are deducting this from our owner's equity. It's negatively affecting our owner's equity. Okay, so you just have to think, is it going to positively affect my owner's equity or negatively? So in this case, it's negatively affecting your owner's equity. So number 5, an account of a dealer, Lutar 900, must be written off as bad debts. All right. So when we think about bad debts, we have your accounts receivable, okay? These are people who opened accounts to buy on credit from you. Okay, receivable, we have to receive, and this is an asset account, okay? So when they make sales, remember assets increase on the debit side and they will decrease on the credit side. So when we make sales, it's going to be recorded here. So they're buying on credit, right? Sales, they're purchasing on credit, so it's increasing what they owe and what we should receive. However, when we write them off as a bad debt, they don't have to pay us anymore, so they owe us less and we will receive less. So it's negatively impacting our account. Okay, so the way we deal with this is we are going to write it off. It will negatively affect our asset 900. Okay, this is question 5. Minus 900. They owe us less. All right, and then in our expenses we will also say minus 900 because this is an expense. You have a bad debt expense account. Okay, so let's move on to question 6. So it's very important for you to always know each of the type of the accounts. Is it an asset? Is it a liability? Is it an expense? You need to know what account you're dealing with. individually, and then you will know how it's going to impact your accounting equation. So you should always think about it before you make a decision. So a check received from Mariah has been dishonored by the bank. Okay, we received a check from Mariah and the bank did not approve of it. The discount allowed on this check was 150. So let's just say, for the sake of this question, we received 150 but the bank returned it. Okay, so we received it and they returned it. So we received money in our bank. Bank is a what? It's an asset. However, it went back, so it's going to negatively affect our asset account because it went back. All right, and we got a discount. Let's say we received the check, it was dishonored. And another thing is, we will have to either, there are two possibilities: either we just received this money by cash, or we received it as a payment. So let's just say it was a sale. So let's say we recorded it as revenue. So sometimes you have revenue and you will have bank. So we recorded revenue, now we have to deduct revenue 150. So we have to reverse it. And then we charged interest of 112 of an overdue account of Maria. So we charged interest. So this is an overdue account. So number 7, we go back to our accounts receivable again. And in our accounts receivable, what we did is, when we doing your accounts receivable, it's an asset account. When they owe us more, we would have to debit that account. Okay, and interest, when we're charging interest to assets and income, so it's going to affect your revenue. All right, so we will charge interest, meaning we have to recognize revenue, and then we also have to recognize that there is an increase in how much they owe us in our assets. So that will be plus 115. Is it 115? 112. And then we add here 112. And now what we do is, we need to calculate to make sure that your assets is truly liability plus owner's equity. We need to see if there's a balance. So now you just add all the amounts on the asset side. So you'd say minus 6,000 plus minus 4,000 plus 25,000. Then we have nothing there, minus 900, minus 150, plus 112. So then you have a total of 14,062. So that's your asset balance. And it should, when you calculate the liability plus owner's equity, it should give you the same amount, 14,062. So let's see. So we have 25,000 plus 2,000. This gives us 27. Make sure there's a space, right? Always make sure there's a space. So for the sake of this question, I'll write it in the box, 27,000. Now we get our owner's equity. What is our owner's equity? So we have 6,000. Then we have minus 150 plus 112. That's minus 38. Then we have 4,000, 2,000. So here we have minus 38. I'll put this in a different color. We have, for the revenue, we have 38 minus 38. We have minus 6,000 here. And then we have 6,900. So now you need to add all this to get your owner's equity, which would be minus 6,000 minus 38 minus 6,900. This gives us a total of 12,938. So if you add 27,000, okay, 27,000 minus 12,938, how much do you get? You should get 14,062. This should be your answer. And that's how you do your accounting equation.